Hello everyone, it's Friday, May 29, and today we will analyze the charts for the euro and the British pound to identify potential market trends. In early trading yesterday, both the European currency and British currencies slipped against the US dollar, weighed down by developments in the Middle East. However, later in the day, the trend reversed amid a more favorable geopolitical environment. Media reports indicated that the United States and Iran had finally reached a preliminary 60-day memorandum of understanding to extend the ceasefire between the two countries and initiated discussions regarding Tehran's nuclear program, a key point of contention. As a result, market sentiment improved and investors began to buy risky assets, which led to a weaker dollar. Vice President J.D. Vance noted that the US and Iran are working through several sticking points, including Iran's nuclear capabilities. Traders also received disappointing economic data from the US on Thursday. The gross domestic product was revised down to reflect only a 1.6% annual growth rate in the first quarter, falling short of the initial estimate of 2%. This revision contributed to a decline in the dollar. US personal income showed no growth, adding to the downward pressure. Personal spending rose by 0.5% in April after a 1% gain in March, which aligns with market expectations but indicates a slowdown, an unfavorable sign for the US economy. The core PCE price index, the Federal Reserve's preferred measure of inflation, increased by 0.2% in April, below the 0.3% rise recorded in March. The year-over-year rate stood at 3.3%, meeting economists' forecasts. These figures were generally in line with expectations, resulting in a decline in the dollar amid speculation that the Fed may raise interest rates due to elevated inflation. Although the current inflation rate is high, easing geopolitical tensions and the latest macroeconomic data could push rate hikes to next year or even further out. Turning to today's macroeconomic calendar, it features a series of statistics from the euro area, including French GDP growth, consumer prices from Germany, Italy, and France, as well as the unemployment rate in Germany. If these readings align with consensus estimates, the euro is unlikely to experience significant volatility. In the US, the calendar includes goods trade balance data and a speech by Fed official Michael Bowman, whose remarks are expected to attract investors' interest. While there are no scheduled reports from the UK today, Bank of England Governor Andrew Bailey is set to speak. His comments on the future of interest rates could bolster the British currency, particularly if he adopts a more hawkish tone than previously indicated. Now let's move on to technical analysis. The 1-hour EUR USD chart indicates that a rise followed by a false breakout at 1.1659 would trigger a sell signal, potentially causing the euro to slide to 1628. A break and hold below this level could push the pair down to 1606, possibly opening the way to 1.1579. At this level, I would recommend considering long positions on the rebound, targeting an intraday correction of 20-25 pips. Long positions at 1.1629 and 1606 should only be considered following a false breakout, with the bulls targeting 1659. If the price breaks out of its sideways range today, though this seems unlikely, selling opportunities could arise on a false breakout at 1678 or on a rebound at 1698, aiming for a move of 15-20 pips. Turning to the British pound, the trading setup is similar. A false breakout at 34.53 would create a selling opportunity with a target of 34.11. A break below this level could drag sterling down to 1.3370, paving the way for further losses toward 33.37. At this level, traders are advised to consider long positions on a rebound, anticipating a move of 20-25 pips. Long entries at 1.3411 and 33.70 would be relevant only after a false breakout. Alternatively, if the price breaks and consolidates above 34.53, it would be wise to consider going long, targeting a recovery to 34.93, especially on positive developments from the Middle East. A further rise to 1.3529 would warrant short positions on the rebound, aiming for an intraday correction of 20-25 pips. Long positions at 34.93 and 34.53 should be considered only after false breakout. Good luck to everyone. Have a nice weekend.